In the world of business, money isn't just important, it's everything. Even the most groundbreaking ideas are rendered powerless without the financial backing to bring them to life. That's where investors come in, playing the pivotal role of turning dreams into reality. But what exactly goes on inside an investor's mind? What drives their decisions? And what sets a winning pitch apart from the rest? We have an extraordinary guest with us, Mr. Anil Joshi, the visionary founder and managing partner at Unicorn India Ventures. A true pioneer in the realm of investments, Mr. Joshi has played a key role in propelling Mumbai Angels and Bangalore Angels to unprecedented success. He is not just an investor, but a mentor, guiding startups across India and around the globe with his strategic insight and expertise. So without further ado, let's welcome the man who turns dreams into ventures, Mr. Anil Joshi. So Mr. Joshi, welcome to the show. Selecting a business to invest in is a bit of an art and a science also. Can you share your process for choosing a winning idea for a startup?
So I agree. Selection is a mix of both art and science, but I will also add, one more factor, which is luck. Certainly, hard work plays very important role, but need to be lucky to be the one, which gives us maximum return. But to cut it short, I think we operate in early stage cycle of any venture where we don't have many factors which are available for us evaluation, like what you can do with a listed entity where you have a lot of history, a lot of background, research work, a lot of ratios which can be evaluated. But when we are investing in early stage, there are very limited information available, for us to evaluate. And also it is said that a VC lands up investing in futuristic business where, in general, we have very, less information available. So while we are evaluating any opportunity, there are few parameters which are very important. Of course, there are many more, but I'll highlight few which are very important for us during evaluation, and that becomes the basis for us to agree, disagree whether we want to invest or don't want to invest, and at what value we may want to invest. So first factor, which is for most important for us and maybe for most of the investors, is a funding team. In fact, today I was reading a statement by Ixigo founder, and interestingly, he stated that all his investors invested only on team and not on business model. Of course, I'm sure there must be many more factors, but for early stage investor, one of the important factor is team, the composition of team, the compatibility of the team, what diversity they bring on a table. Are they exactly same side of the coin, or they are both side of the coin? So composition of team, their background, their ability to understand the subject, and a nick of change if there is a need of the hour. For example, before pandemic, world was different. During pandemic, world was different. Everything went digital, and now post pandemic, there is totally different requirement for business. So each team capable of adjusting to this changing environment. Second, what problem is getting solved, and what is the scale of this problem? Is it very local, or is this problem quite universal, which is being addressed? What solution has been built in by this team to address this problem? Is this solution applicable nationally or internationally? Has team built any IP around it? If business have an IP, it actually helps us, giving additional points for selection. Third, how scalable is the opportunity, right? The problem might be big, but the solution may not be scalable. So is it scalable or not? How quickly it can be scaled? Is team capable of executing or not? Or do we need a different kind of team once, the product has found some acceptance? And last, not the least, is, what is the exit potential for us once we have invested in, right? So these are the, some of the parameters which are very important for us to at least select go, no go, for shortlisting a deal.
So, Mr. Joshi, when a startup pitches to you, what captures your attention most? The idea, the team, the founder, its scalability, the purpose behind it, or the valuation? What is it?
Every factor is important, for grabbing the attention. But what, grabs my attention more is founder's ability to articulate and explain what they are up to, how passionate they are, how, improved they are in the, problem which they are solving, their ability to dissect business in simple way and bring me on same frequency at which they are operating, right? Because founders are one who have created the solution, but as an outsider may not be at same frequency. So their ability to bring me to the same frequency, their ability to translate their passion, their ability to differentiate themselves from any competition or substitute. I think that's, grabs the attention. And if that has been established, then, you would like to spend more time understanding what they're doing. You would like to spend more time understanding the value proposition they have, valuation. But I think the one which, helps in resonating is founders' ability and capability to engage us on, their problem-solving ability.
So taking the trip down the memory lane, what was your very first investment as an angel investor? And can you share your experience with us?
So my journey is over 2 decades. The first decade went in half being part of corporate venture arm, and then almost for few years I was angel investor before I started Unicorn India Ventures, which is in its third fund. But coming to your question about my first investment, I think those were the days when I had zero understanding about startup investment. In fact, there was nothing called startup those days. And I remember that time Prime Minister was, Dr. Manmohan Singh. And he had come up with a policy around renewable energy. And the sector was looking quite interesting because that time India was not so prominent in wind energy and solar energy, and that particular policy was all around solar energy, and was so excited about the prospect of this. One came across one very interesting business plan which was around solar energy, and that was basically running a running air conditioner using solar energy. And that grabbed the attention, and the announcement of a policy, actually, excited me about the opportunity. Landed up making my first investment, early 2000. So that's my a bit about how I landed up making my first investment, which was more opportunist than anything else.
So, Mr. Joshi, you have got quite a portfolio. So how many startups have you backed so far, and what kind of value have you helped them create through these investments? If we talk in terms of figures and numbers.
I have a 2 distinct portfolio which I still carry. One, as I invested during my angel days, and then now have built portfolio as a VC investor, right? And in both cases, if you look at there is a very different approach, because when you invest as an angel investor, it is your own money. You don't have any pressure on timeline, and you can stay invested as long as, like in sum of investment, I'm invested still for now 12 plus years and still going, still continuing those investments. And whereas as a VC, you have certain timelines to adhere. So I'll give you a bit of both. I think as an angel investor, the biggest value add any individual can add is being the sounding board, or being available, to the entrepreneur during his formative days, with their time, right? Because the first generation entrepreneur, he is very enthusiastic about their idea, but when it comes to commercializing and scaling it up, they go through their own range of challenges, and there's nobody there to guide them. And if you are an angel investor or you're their first investor, I think the least what a person can do apart from writing a check is helping them during their formative days. So I been involved in many cases where I was playing important role solving conflict between founders. I played very crucial role in helping opening up initial doors for businesses. Many a time founders are stuck taking decision when they are going for next round of investment, and they are not able to conclude on some of the legal aspects. It's very important to explain them why it is needed, not needed. So I still, while it's almost now a decade plus, I still get calls from some of my investing companies. They are stuck on some legal issues, helping on recruitment, helping connecting to next stage of investors. I think these were the few of the roles I played during my angel investment days. But now as a VC, the role is very different because we need to adhere to timelines, and the journey is slightly faster, shorter. Here we get involved, slightly deeper. Engagement is more regular. We work very closely in setting up systems, strategizing if they need to pivot, pricing strategy, when to raise next round of investment, when to induct critical team members. In some cases, we were also instrumental in bringing, a new co-founder in the team, just to give different impetus to venture. Helping founders, providing exit to investors is also a very important aspect we play. So I think as a journey as a VC, it's very different. It's time bound. Since the day we invest in, we get actively involved with company, not on day-to-day aspect, but at macro level, at strategic level, helping getting, important hire done, opening up door for, new investment rounds, helping expanding internationally. Now we are also involved with one of our portfolio company, helping them open up doors in Middle East, not only helping finding a partner, but also helping the entire business strategy. So different hats, different role has been playing for last 20 years.
Sir, every investor has a non-negotiable term. So I'm sure you might also be having one. So what's that one aspect that you would absolutely not compromise on when considering an investment?
I think transparency and ethical practices, one which I am unable to compromise on. If any time during the journey before investment, if I have any iota of doubt, I'll just walk away. But in some cases, you may land up investing and then you see, certain traits of that. I think I want to make it very clear because this relationship I call is, very like an Indian arranged marriage where, you marry but you don't have opportunity to divorce, right? You need to live with the, your investment till time. Either you realize it or it goes, down. So these are all long-term relationship. And here, one thing which we will not like is, non-transparencies or non-ethical practices. As long as founder is transparent and ethical, I think we will always, to support, and we have actually gone, extra mile to help turn around businesses where everybody have seen a win-win situation. But these two things are very, non-negotiable for me: transparency and ethical practices.
So you have seen countless pitches over the years. So what's the most unexpected thing that has ever influenced your decision to invest in any startup?
See, this one investment is very close to my heart, and I'll tell you why, which we didn't wanted to invest in, because normally as a VC investor want to stay away from, businesses which are before proof of concept. And I actually, was invited to an event in Trivandrum, and the event got over and was about to, leave in the evening, and I was, asked to visit, this one business which was there in the same premises. And I said, why don't you visit? Being started by, 4 co-founders. They're doing something very interesting, and you may like it. So I asked what they do. They said that they're making some cleaning robot for manual. I said, one, it is a cleaning robot, manual. It's not a VC investable, venture. Like, I'll be wasting my time if I go meet them. Better I avoid it. But they said, they insisted, Anil, why don't you, on our suggestion, request, just spend 5 minutes, and I agreed. So if you look at, from very initial thought, had made my mind that I don't want to look at it, don't want to invest in, but then I was, basically forced to go there. And when I went, it was a very small, maybe 10 by 10 room, or maybe, smaller than that. And there was, one, basic model made out of wood, and board was hanging from ceiling wall, and there were 4 people who could hardly stand, and then we were also there to look at it. I got excited by seeing, in never ever I have seen something that kind of product being hanging from wall and doing something. And then I started interacting out of curiosity with the founders, and they were literally bunch of kids came out of college, 1 year experience or so, and then they started explaining me what problem they were solving, and were so passionate about the problem they were solving without even having gone through those. So I'm sure engineers probably would have never seen what a manhole worker would go through while cleaning the manhole. We all have probably heard that many people lose their life because of toxic gases, or they get trapped. But a student with 1 or 2 year of experience, explaining me something which I haven't experienced, understanding their knowledge, looking at their passion and what they're solving, and they were able to give me the size of the business which they were trying to grow, although it was very socially impactful. And after hearing their views, after hearing their business plan, after seeing the model what they prepared, at least I felt like the least what I could do is write a check which at least helped them making this cardboard plywood to the actual product. And that's how landed me investing the small amount of 60 lakhs in that company. And today, that is, I'll say one of the best performing company in our fund one, right? So very interesting story. I always tell more.
Oh, that's a very interesting story. So can you reveal the name to our viewers of that startup, that company?
It's a Gen Robotic from Trivandrum. Company has never been in loss since they went into production, right? So they had been profitable since they went live with their product. So very interesting company. Normally people think this kind of company cannot get built. They think not only built it, but had been profitable since they started.
Sir, you are a very popular venture capitalist. So how do you balance the emotional excitement of a pitch with a cold heart analysis, which is required to make a very wise investment decision?
I think now I've passed that stage where, emotion will anyway drive, my investment decision. After spending 20 plus years having heard at least, I would say, I don't know how many, thousands of pitches. I think I've passed that stage, so I don't have much to contribute. I'm able to manage that very well now.
So, sir, if we flip the script, like if you were a startup founder pitching to an investor like yourself, what would your opening line be? What would you say in the first line that you would tell to an investor like you?
See, if I have to do that, I think I have now understood one thing, that the attention of span for any investor is very short, and in this short span, I would definitely like to communicate three things, and these three things I have to communicate in span of 30 seconds. I think I'll be lucky if I'm able to do it, but I think I use this 30 seconds to communicate quickly about background of team or founders, which probably me and whoever is with me. Second, the problem is being addressed, what solution we have brought in, and how big is it. So I would frame all this aspect in first 30 seconds, and I'm pretty sure I'll be able to grab the attention of the investor in this 30 seconds. That's what I'll do.
Sir, if your investment philosophy were a book title, what would that be?
Book title: How to Make $1 Billion.
So, just two more questions, Mr. Joshi. The first one is, imagine if you could invest into any startup for many decades. Which one would it be, and why? Like, suppose if you have to choose one startup in which you could invest from the past 20 to 30 years, which one would that be?
I think I like one company a lot, which I missed investing in, is InMobi. And probably that was one company which also influenced me being in this space of investment, because I could see they're growing very fast, a very unique team of founders, high caliber, very intelligent, dynamic, and their ability to take decision pivot. Because I still remember when InMobi had come to Mumbai, initially it was called M-Coach, and that company got pivoted to InMobi, which is one of the largest mobile ad platform, and they also built something called Glance, which is again $1 billion, right? So a very valuable, where you would like to stay invested, because they are the one who are able to read what is coming and build product before anybody think about it. So that's one company I missed invest. But if I would have invested, I would have loved to continue invested in that company.
So since the name of the show is Inside Investors' Mind, so we would like to ask you, like, what really goes inside an investor's mind?
I think you asked me one thing, what could be the name of the book? I said, How to Make $1 Billion, where an investor is evaluating any investment opportunity. I think one thing which goes in mind is that whether this investment will make those 30, 40, 50x for me or not, or whether I'll make money or not. I think that's what goes in my mind for sure.
Mr. Joshi, thank you so much for joining us and sharing your insights on what goes inside investors' mind. So that was Mr. Anil Joshi, Managing Partner at Unicorn India Ventures, talking how money is important, but not everything. Investors look for passionate founders with a strong team, a scalable solution to a real problem, and a clear exit strategy. For more in-depth interviews and discussions like this, head over to TICE.news. Don't forget to like the video, share it with anyone who might be interested, and subscribe to our channel for even more engaging content. Thanks for joining us, and we'll see you next time.